Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, so we talked about being in a band ride. That band ride continues. They had a hard push down yesterday in the middle of the day, whether it was news related or just a push down. What it ended up being was a pretty big bear trap. They caught everybody over the tips of their skis, and all they've done is taken it back up. Taking out the 2850 area, which we talked about earlier yesterday and back into Thursday, Friday. 2 weeks ago we were talking about things reaching on Monday into Tuesday. Actually, 1 week ago, Monday into Tuesday, we were reaching for 2750. Now, I was talking to subscribers yesterday at the close because we're long the 30 area that it had the potential to reach up into 50. It's traded as high as 53 as I'm taping this at about 7:20 this morning. So this upper band ride is continuing. The bands are starting to open up. Hourly chart, hourly mid-band was support. You had one big push down yesterday that did 27.5. The issue was once it did 27.5, it started to deal with the 2830, 2831 area, which was your hourly mid-band, literally for the next 45 minutes to an hour. It chopped around in there. The takeaway was the bears couldn't achieve another lower low. We were actually short down there against the 3132 area. We ended up dumping that for a tick. We were short 2830 quarter and getting long 30 half, and we're still long 30 half. Because in this type of tape, where on the intermediate to longer term time frame, you're on an upper band ride, you give the bears some opportunity to execute. But once that opportunity to execute starts to go sideways and they can't get it done, then you have to identify that it's just not working. The bears would have had to prove to me that they could convert not only 31 but our proprietary lower level, which was down in the 28 area. Until they could do that, we wanted to be long. So, and it played out again where the bears just couldn't execute. They took it up slowly over the course of the rest of the day, flattened it out a little bit overnight, and then, once we got past the Europe Open, it's been a really steady climb higher. So you're talking about a 100-handle move in the course of a week. We are just grinding. It's a grind. It's not a parabolic ramp. You get these little pushes like we have right now. You get here, you got here, and you got here. So whether this upward trajectory is completely sustainable in the regular session remains to be seen. We've seen pullbacks every day. No reason we wouldn't see a pullback today. The issue is that pullback going to just go ahead and get bought again? Chances are it will. And until the bears change that dynamic, nothing about that daily chart and nothing about this hourly chart is going to change. So certainly buy dips mode. We've already been back to the daily mid-band. We went back there, here. We dealt with it on the 11th. This was our opportunity back on March the 8th to take it out when we went down to 27.26. Bounced. They lost it. They reconfirmed that daily mid-band as support and then higher highs. So we talked about how if they didn't convert or if they held the daily mid-band as support, that current high didn't really have a chance. Didn't have a chance. They took that out pretty efficiently. So as I head into today, my concern is always, where is the hourly mid-band? 42. You've got volume weighted average price, 45. So if you're going to get a dip this morning, somewhere in that area is where the bulls would have to stand in and defend it, and where the bears would have to do that extra step and execute and turn it into resistance to push lower. All right, everybody have a fantastic day. We are live on Instagram at 9:20. Come check us out before the bell. Take care. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.